Welcome, members and guests. This is Joanne Obata. I'm filling in for Mina, our president, and this is the International Model Stock Investment Club meeting for September, and we are Better Investing Model Club, open to the public. All of our meetings and stock studies are virtual, and we are honored to have members from around the world and the U.S., including Canada and China. Guests, you will be muted during the meeting as observers and will have an opportunity for questions and comments once the meeting ends. The stocks presented today are for educational purposes only and are not intended to be a recommendation for buying or selling any stocks. We ask that you conduct your own review and analysis of any company of interest before making an investment decision. The views expressed are those of members and do not necessarily represent those of Better Investing. This meeting may use products or services not endorsed by Better Investing or the club. This meeting is also being recorded for future use and will be posted to our YouTube channel. Okay, do I have the screen right now? I'm going to pass the screen over to Reddy. Are you prepared to do the treasurer's report?
Actually, can we do education topic first? Schaefer's here.
Oh, Schaefer, okay. Can you pass? He's muted.
Yeah, Schaefer muted. I don't think Schaefer does not have a screen.
I'm here.
Okay, go ahead, Schaefer.
Do you need the screen, Schaefer?
No, actually, I shouldn't need it.
Okay.
So, hi, everybody. My name's Schaefer. Schaefer Myrick. I am an energy consultant currently working under contract with Sunrun. I need to make a couple disclaimers. First, I cannot give anybody I can't advise anybody on any stock purchases. This is for information only. I also am not expressing the views of Sunrun in any way. Everything that I'm going to share with you today is based on my own research and is in no way affiliated with my professional work. So having said that, I'd like to go ahead and just jump into the questions that you guys sent over. The first thing that you asked is what are the metrics for growth? The traditional metric for growth, for actually measuring the growth, is kilowatts installed. That is to say, how many systems, how much energy is a company producing with the systems in their fleet. Globally, installed global capacity, 5-year average, according to a couple of industry organizations, is right around 27%. Mostly that's in China. The United States, for example, the 5-year average is about 6. But we've actually got a lot of room to grow, and it's kind of exciting. You guys asked what really drives the industry and drives growth. The main contributors are going to be rising energy costs. Energy costs are nationally about 2 to 1 over inflation. So if inflation's 3%, energy costs are growing at about 6% per year. Certain states, California, Massachusetts, New York, are well above that. California's coming in somewhere in the area of 12 to 18% or 12 to 18% increase year over year over the last 5 years. The other big drivers are going to be energy instability. There are a lot of rural areas throughout the world, not just in the United States, that don't have access to reliable energy, which is, if you look at Europe and some of the smaller countries and even areas in China, that's one of the biggest things that's really leading the charge It's just a lot cheaper to put solar out than it is to build infrastructure from an electric plant thousands of miles away. So that's really helping drive it. And then the last major contributor, the last driver, is going to be carbon awareness. It doesn't really matter what your politics are. It should be plain to see that we're using fossil fuels, which are a non-renewable resource, and we will run out. It is, in a lot of people's opinions, a large contributor um, to climate change. And so those are our three main drivers. Somebody had asked, where the growth comes from, and is it residential or commercial? Where is it at? And there's been pretty significant growth in both sectors. Commercial tends to run 10 to 15% higher annually, and that's we're talking about kilowatts installed, than residential does. But at least in the United States, the residential market is less than 4% saturated, meaning that 96% of the residential customers in the United States have not converted to solar. So there is a huge, huge market still out there. It's been around a long time. It's really gotten popular over the last 20 years. And and so with states, increasing their market share up to 16% growth, we still even have market saturation. So there's a lot of room to grow there. And another thing that I want to point out on this topic is, with the commercial, generally it's easier to build large systems than it is to build smaller systems. And so a lot of commercial companies are actually using their systems through brokers to sell power back onto the grid, which, it's one of the big reasons that the commercial market leads the industry. And then another aspect of it that really wasn't addressed in the questions, but I believe is important, is the industrial use of solar. If anybody's flown from Northern California to Las Vegas, or from Las Vegas to pretty much anywhere east of there, over the last year and a half, you've probably noticed some monumental industrial scale power plants out there, solar power plants. That is a newer sector of the market where venture capital groups are reaching out to developers and vice versa, and partnering up to create gigawatts and gigawatts of power. And so those are really the three biggest contributors to the growth. The next question is, is there any new tech? What's coming out? The industry is constantly evolving. Over the last 10 years or so, the biggest innovations have come in the form of manufacturing, means of manufacture for the PV solar panels themselves, and in the power handling equipment, the inverters, the parts of the systems that turn from the perspective of the PV panel itself, the PV module, is that they're starting to get better at, rather than growing crystals, which is how they used to do it 30 years ago. They're actually able to silicone, um, and then just slice away layers. And so it really reduces the amount of energy needed to create the panels. And once this technology is adopted more thoroughly, it's going to lead to big savings in the PV module market. So I was taking a drink of water here. Someone asked about maintenance costs, and this is an interesting question because, as with anything, there are maintenance costs. Generally speaking, the PV module, the panel manufacturers warranty their equipment for around 25 years. Life expectancy for a PV module is actually way beyond that, but the manufacturers are willing to say, hey, if these parts break, we'll replace them as long as it's within 25 years. And then with the power handling equipment, it's generally closer to a 10-year, 7 to 10-year warranty. Where this really becomes important, especially as investors, is when you're looking at the model of the company that you may be investing in. Because a company that is just selling, cash deals, loans, just selling the PV solar, aren't really going to have a maintenance risk, right? They sell it, they're out the door. Now the customer incurs any maintenance charges. And then, the other big way that especially the residential and even some of the industrial scale stuff is monetized is through a power purchase agreement, right? Where the customer says, I'm going to buy power from you at a given rate for a given period of time. Anybody in North America who has power to their home has a power purchase agreement with their local utility. It's the same type of thing. And so with that, if the company that you're looking at engages in power purchase agreements, they will have some maintenance liability. And so it's really important to look at how they cover that. I can't go too far into it because it does start murking into my professional, to what I do for a living. But the information's out there and it's not too hard to find.
Thank you, Schaefer. This is Joanne. I wanted to, I appreciate your taking the time to talk to us about solar. We have a few minutes for people to ask questions before we have to move on to the rest of our meeting. And so
Sure.
I have muted some of the people because I like to remind our members that you need to mute yourselves before when somebody's speaking, and so I've muted you. I'm unmuting everybody right now. Okay, so does anybody have any questions for Schaefer?
Yeah, what was the saturation percentage for commercial and industrial? I know you said 96
So
yeah.
Well, commercial and industrial, they don't really measure it that way because it's really wide open. When you're talking about market saturation for commercial and industrial, what you're really talking about is replacing power plants. And so, the market for wholesale power is growing exponentially. And so it's really kind of hard to put a finger on what the actual market percentage is on it.
I see. And
but it's low. I mean, it's low.
And then are there many companies doing the slicing of the panels that you were talking about?
Yes, there are.
Okay.
A couple of the big ones that are doing it, and honestly, most most of the panels that we're getting from China and North America are moving to that if they're not there already. But Yingli Solar, Longi Solar are two of the more high-end panels that are using it, but are still a consumer grade, if that makes sense.
Nobody in the U.S.
Nobody's really building them in the U.S. Even the companies that make China. There's one company that I know of, and I could be wrong, but there's only one company that I know of that's actually manufacturing their panels 100% in the United States.
Okay.
Quick question. So you mentioned power purchase agreement, power purchase agreements.
Sure.
The wind supplier, I guess, has to.
Sure.
They have to guarantee the power. So.
Sure.
Do they must have backup power, and is that what typically is that form of generation?
So generally speaking, for on the residential end, in the United States, you literally have to be grid. And so the way it works, you produce power and you sell it into the grid, and then as you need it, the grid sells it back to you at the rate at which you produced it. So there's really no backup unless you start getting into battery technology, which
so they don't use
need
gas
another meeting for that one.
They don't use gas turbines.
Who doesn't use gas turbines for solar? No. I mean the power companies do, sure.
Yeah, if they can't if the solar supplier is not able to meet their contractual obligations, don't they have to have backup power?
Well, yeah, but they buy that. I mean, so okay, so let's say I'm an industrial scale PV electrical supplier. If I can't meet my quota, I would have to have a contract with a gas turbine or hydro or some other generation means where I could buy the power and move it into the grid in place of my own.
Okay.
Does that make sense?
Oh,
yep.
Sorry to interrupt, but we have a lot to cover for this meeting, and we really appreciate you taking the time, Schaefer. Do you mind if there's any outstanding questions that we could have Jay send them to you?
Yeah, absolutely. You know,
Okay.
I'd love to talk to anybody. So yeah, absolutely.
Okay, awesome. Thank you. Okay, I'd like to introduce Carol Stein, who's our mentor for this meeting. Carol, when do you have to leave by? Because I want to make sure that we get feedback from you.
In about an hour.
Okay, so 6:45, I'll make sure to have you come in and give your feedback. Okay, the next portion we have is Reddy and Tom Loftus giving the Treasurer's Report and Portfolio Management. If you wouldn't mind making this, summarize this so that we can get on to our stock study and quarterly reports, that would be great. Who would like to go first? Reddy or is Reddy not on here? I don't see Reddy. Tom, are you ready to?
Yep.
Okay, I will give you the screen.
Tom is not ready. He's Tom.
No, I said I'm going to give Tom the screen.
Oh, that was a joke. Sorry.
Oh.
Okay.
I can't give Tom the screen, so if anybody who's got.
I think it's Jay. Jay has to because she's. I think she's
okay.
the.
We are looking at it. We're looking at his screen. All the organizers, you guys can do sharing. FYI.
Oh. Okay. All right.
So
Okay.
you guys can see my
So-
screen?
Yes.
Yes. Thank you.
Okay. Let me just make it a little bigger. Okay, so this is the summary, and everyone has their actions on the later in the agenda. But First American met all the buy criteria, and Schwab, Comcast, eBay, and Qualys showed up as sells by our portfolio review technique. The average portfolio is down a wee bit to 13.7 this time. It's down from 15. So I look forward to just hearing comments from from Bernie with First American, and then the stock watches for Schwab, Comcast, and eBay later and Qualys later in the meeting. So that's my presentation, Joanne.
Okay, great, thank you. So now we'll get to our stock study presentation for this month, which is the communication sector challenge. And Tom, do you want to
Sure.
take that? Okay.
Okay. Okay, so the communication sector different sectors in the portfolio, and then look for stocks to challenge them. So this is our portfolio, and just a little bit of history. We're concerned about this is a manifest dashboard, but if you look at and it's in par order, which is what we would call our target target results or target expectations. So we have these companies that we would like to improve their return. So we thought let's try and look at challenges. So the first on a sector basis, we have if we look at our medium, we should have 50%. We only have 36 for medium-sized companies. Our small companies, we have a target of 25. We only have 15, and we have too many large companies. This is a look at our sector allocation, and for the most part, we have a very good sector allocation. So with the exception of the communication sector, the suggestion is you don't have any more than 30% of a sector. Although we have 8 sectors, we do have 30. We're pushing the 30% limit on our communication services. So that was the sort of thrust behind looking at the communication sector. So whenever we reviewed the communication sector, we went to manifest and we looked for any companies in the communication sector that could challenge the companies that we have. So we're talking now about Comcast, Disney, and Facebook. So the company we come up with was Google, like at 98% quality, 14.5% as a par. The Netflix, we looked at it, but par was low, and then it had a very high projected PE. And these other companies, we took them out because of their low quality. I did follow up a bit on Nintendo, and it's an ARD. It's its home country is Japan, and I talked to my son, who's a bit of a gamester, and I talked to my son-in-law, who is more of a gamester. They both think that the company seems to do the wrong things when the gamers are looking for something, and they always seem to disappoint the gamers. And so that small review and then looking that we couldn't get good data to do an SSG, we just concentrated on Alphabet. I did a stock comparison, but I'd like Mukesh now to talk about Alphabet, and then we can compare it to our companies in our portfolio. So is Mukesh okay to go ahead and do his part of the presentation?
Hi, Tom. Yes, I am ready. If you could share the screen. Someone could share the screen.
I think you can just
Make you the presenter, Mahesh.
Okay, can you see my screen?
Yes.
Okay. My name is Mahesh, and I'm going to take you through our first case study on report on Alphabet. Now, what is Alphabet? Let's look at it. Now, Alphabet is actually the holding company with Google, the internet media giant, as its wholly owned subsidiary. Google generates 99% of Alphabet's revenue, of which more than 80% is from online ads. It has a market cap of 1.9 trillion and is a large cap. It has three classes of shares, of which two are listed. The first is Class A shares, which has one voting right to each share, and they trade as GOOGL. And the other is Class C shares, which are non-voting and trade as GOOG. For the purpose of the study, I have taken the share price of GOOG, the non-voting shares. But the price difference between them are not significant. They vary probably about 2% at most. Alphabet is a global company with a network of offices and data centers and R&D facilities in North America, Europe, South America, and Asia. The US generates about 47% of revenues, EMA 30%, Europe, Middle East, and Google Maps, Google Play, Search, Google Drive, YouTube, AdSense, AdMob, and Google Ad Manager. They generally generate revenues primarily from advertising on Google Search, YouTube, and Members Network properties. Members Network properties are publishers or other independent website owners and publishers and content producers who make their ad space on their properties available through one of Google's platforms, ad tech platforms. The other revenues from Google services are basically sales of apps, digital content products, hardware such as Chromebooks and Pixel smartphones, Nest products, and fees for subscription-based products such as YouTube Premium and YouTube TV. The other segment, which is up and coming, is Google Cloud. Google Cloud includes Google's infrastructure and data analytics platforms, collaboration tools, and other services for enterprise customers. Google Cloud generates revenue from fees received for Google Cloud Platform Services and Google Workspace, formerly known as G Suite collaboration tools. The other bets are mainly moonshot investments where it bets on technology to enhance health, for example, through Verily, offer faster internet access to homes, Google Fiber, and also they have investment in self-driving cars through Waymo. And of course, they are also into smart home products through Nest and many more. Why is Google a high quality growth company? It has steady upward trending sales and EPS growth of 18.7% and 17.3% over the past 10 years. It's got good financial health, low debt equity ratio of 5.1, and its 5-year average pre-tax profit margin is 25.5 with an ROE of 15.2%. Its closest competitors are Facebook, Amazon, Apple, and Microsoft. Well, let me just take you to the SSG. This is what I mean. If you look at the SSG chart, very nice trending sales, upward trending sales, and EPS. And if you look at the quality on evaluation management, all green. Debt to capital is a bit red because their debt has increased recently by virtue of one accounting an accounting change where the accounting for leases, lease liabilities were now reflected in their balance sheet, and also in 2020 they did a $10 billion bond. But if you compare it against the peers, their debt equity ratio against their peers is not too high. Google is 5.5. If you look at the peer group average is 8.3. So I don't think it's too excessive. And therefore, Google passes the test as a quality company, in my opinion. Let's go back to the screen. Now let's take a look at where Google's revenues come from. Now, the past 3 years, the revenues have grown 18.3%. But within their revenue streams, there are certain fast-growing sectors. The first one is actually Google Cloud. If you look at it, it's the gray bar here. It has grown at 48% in the past 3 years. That's the fastest growing segment, and it's being driven by the move towards moving cloud-based applications and data storage in clouds. So there's a strong growth there. We'll talk that about later. Within the Google's traditional advertising segment, Google services, the fastest growing is basically YouTube ads. YouTube ad is advertising. They're selling a lot more advertising space in YouTube, and that's they bought YouTube quite some years back, but now they are beginning to fully capitalize the true commercial value of YouTube as advertising revenue generator. The other segment that is going is Google Others, which is basically the sale of hardware and subscription services. Now, this subscription services is basically for YouTube Premium and YouTube TV. But there's a lot more potential there because when you look at its competitors in this space, YouTube competitors in this space like Netflix and Spotify, YouTube has about 1 billion users, but the subscription base is very small, which is the reverse for Netflix. Netflix has a much smaller user base, but they have a very high percentage of subscribers, similar for Spotify. Apparently, YouTube Music is apparently the most listened to app for music, but a lot of them use the free service. So there's a lot of potential. For Google Cloud, Morningstar actually projects 32% annual growth in Google Cloud to 2025. Now, let's look at where profitability comes from. Google Services is the only profitable business segment. Google Cloud is losing money, but the losses are being narrowed. Google Cloud is the orange bar here, and if you look at the recent years and quarters, the losses are narrowing, and that's where and there's an expectation that Google Cloud may turn profitable in the coming years. Okay, let's just look at how Google's business model, advertising revenue, how does it generate advertising model revenues? Basically, their business model is they offer the search engine and other products like YouTube, Gmail, Android. These are all catered towards users, and this becomes their advertising platform. And then they have various tools where publishers and advertisers can use to advertise on this space that they make available. Now, Google has over 80% share of the global online search market. As its products are adopted by more users, Google's ecosystem strengthens, making its online advertising services more attractive to advertisers and publishers and resulting in increased online ad revenue. Now, Google's ecosystem of products includes products such as Search, Maps, Chrome, YouTube, Gmail, Android. These products have very high, large user base and strong value proposition to users. Now, this enables Google to gather and analyze a massive amount of user behavioral data, which they can use to market and to the advantage of advertisers. To capitalize on this behavioral data, Google has various ad tech tools. These include ad buying tools such as AdWorks, Google Ads, DV360, and an ad exchange which matches advertising bids with ad space, and also ad selling tools such as AdSense, DoubleClick, and AdMob for publishers and website owners to offer their advertising space. It has recently merged DoubleClick and AdX into a single product called Google Ad Manager. The firm utilizes technological innovation to improve the user experience in nearly all its Google offerings while making the sale and purchase of ads efficient for publishers and advertisers. Google offers the best return on investment for advertisers and built a growing network of advertising customers. With this data that it can offer to publishers for more targeted selling of ad space. Now, the other area that is growing is, of course, the adoption and use of mobile phone devices is increasing. Google's Android mobile operating system's growing market share is helping it drive revenue growth and maintain its leadership in this space. Android powers over 85% of world smartphones. Android is offered for free and is another huge base for user behavioral data. According to eMarketers, Google has a 37.2% share of the US digital ad market, followed by Facebook, which has a 24% share. Given its dominant market position, Google faces antitrust pressure and various claims and investigations brought on by different companies and regulatory agencies regarding search bias and overall market dominance in online advertising. Now, there are two views, some things that, Google may be forced to break up, like how Microsoft was forced to a couple of years ago. The most analysts think that this, whatever comes out of these regulatory actions may not have much impact on Google because their business is quite diversified. Now let's look at what's driving growth in Google, the cloud market. Now the industry has grown from 85 billion in 2015 to 290 billion in 2020. Is projected to grow to 706 billion in 2025. Now, this is primarily driven by rapid digitalization across all industries and the emergence of new technological needs which require multi-cloud, cloud-native data analytics and AI-driven processes. In this segment, Google Cloud is not alone. The incumbents are Microsoft Azure, Amazon AWS, and Alibaba. But I think Google Cloud is making good progress. Now, why do I say it's making good progress? Because if you look at the orders on hand, the Google Cloud orders on hand that it has increased from 11 billion in 2019 to 30 billion in 2020. Now that is because these are all orders which they have on hand and which will be executed in the following months. Of the 30 billion, it's reported that about 15, half will be delivered, will be booked as revenue in the next 20. Also very global and across various industries, as you can see in this schematic presentation of their customers. Well-known names across industries and across countries. Now, what is analyst view on Alphabet's industry? Generally, the analysts think that the accelerated pace of e-commerce will continue. COVID-19, the pandemic, helped pushing everyone along the e-commerce and digitization trend, and they feel that this will benefit internet and communication industry, including Alphabet and Facebook. Value line thinks that the long-term prospects are favorable to the internet industry, especially companies with established market positions. However, in the 6th August report, Value Line opined that Google was a short-term appeal, largely because Google's price has actually gone up quite substantially in the last year or so. So that's a Value Line's opinion. Morningstar, on the other hand, think that in the communication sector, Alphabet and Facebook has led the sector recent gain. They're very positive on advertising growth. They think the shift to e-commerce shows no sign of reversing, and more businesses will be advertising online to attract increasing customer spend. Now let's look at what analysts are projecting for Google's growth rate of sales. Now the 2-year forecast has been quite aggressive at 21 to 26, 27%, but the 5-year forecast are a bit more moderate, from 18% to 19.5. Now I think 19% would be reasonable looking at where growth Google is trending, so I've taken 19%. Now in terms of EPS growth, I have looked at the preferred procedure calculation. I've made certain adjustments to the defaults here. I feel that the pre-tax profit margin of 25.5% is a bit low. I bumped it up to 28%. I also did that because I read that Morningstar is expecting a deceleration of growth in Google's operating expenses to lead to profit margin expansion through 2025. Value Line is projecting operating margins of 37% for the years 2024 to 2024 to 2026. And so I settled at 28, which if you look at the historical data, I think it's reasonable, because the recent quarters have come up to 31, 34%, but in 2020 it was 26. So I think 28% is reasonable. Tax rate is 16.3%, which I felt long-term may be a bit of a high. So I've looked at the tax rate in 2018, 2019, and I've moderated it to 20%. Now this gives me a preferred procedure growth rate of 13.6%, which I felt was quite low when analysts were projecting 34.2. So I looked at what were analysts projecting, the EPS estimates by analysts, and I noticed that the analysts are projecting EPS growth rate of between 21 to 34% over the next 5 years. So I thought 19% is a bit conservative, but I think it's reasonable, and it's in line with the sales growth rate that I was projecting. So my estimate is 19%, and I've used 19% EPS growth rate. Now let's look at the next projection I need to make is the high PE forecast. I looked at the average PE forecast is 29.4. I note that the PE has been increasing slightly from 29.2 in 2018 to 31.5 in 2020. It's now trading at a PE of 30.8. So I thought 29 would be a reasonable PE. So I've chosen that. It gives me a high stock price of 6384. But let's look at my low PE and low price. Oops. I think I got this. My headline is wrong. Okay, so when you look at low PE, I looked at the low PE, average low PE is 21. I noticed that the low PE is trending downwards from 2016 to 20.6 in 2019. Now 2020 dropped to 17.3. I think it's an exceptional year because of the COVID pandemic. There was a lot of flight of capital out of the market. I don't think it will go to that low, so I thought 20 would be a reasonable low PE forecast. At current low of last year's low of 1013, I think is reasonable, and we'll stick to what the SSG is recommending. So I'll take 1845. Now let's see what that gives us. Google does not give any dividends, so the returns would be purely from capital gains, stock price appreciation. Now it gives it it places Google in a buy zone with a forecasted high price of 6384, forecasted low price of this with an upside downside of 3.4 to 1, potential appreciation of 122.5. Now the total return is 17.3, projected average return based on average PE is 13.5. Conclusion is that we can consider buying this, but just to note that it's probably trading at the high end. But if you look at the chart, which I showed earlier, you look at it, even if it's trading at a high, you see in the past years, the share price performance has actually exceeded the highs in each of the years. So I think this is a stock that we can consider adding to the portfolio. That's it. Any questions?
Thank you, Mahesh.
Thank you, Jane.
GOOGL and GOOG. Yeah. What was the difference between GOOGL and GOOG? One more time.
Okay, GOOGL, Google A-class shares, which have voting rights. They one share entitles the holder to one voting right. And there's another difference which will no longer be a difference. The other difference was that in the past, only Google's C shares, which are GOOG, were subject to share buybacks by the company. But the resolution has recently been passed, which also subject GOOGL to share buybacks. So that difference is gone. Did I make myself clear?
Thank you.
Thank you.
Yes.
Thank you.
That was a pretty good presentation, I think.
Thank you.
Yeah.
Thank you. Who's next?
Thanks, Mahesh. Yeah, that was nice.
Okay.
Thank you.
So
Joanne.
can you give me the screen back?
Yeah, I'll
Joanne?
give you this. I'll give you the screen, Tom.
Okay, you can see my screen. So we put the we did a stock comparison guide with the four companies, and Facebook, if you count the greens, it shows up better than Google in this particular scan. But if you take out Facebook, then all the green spots basically move over to Facebook. So as Mahesh said, he got a total return of 17.6, 14 for Facebook, Comcast 7.9, and then Disney. We can talk a bit more about Disney. I think we've reviewed all these stocks before, so I'm just going to jump to our recommendation. So what our recommendation was is to keep Facebook. Matt will talk about Disney later, but I'll just put forecast here of what he's going to say. He's basing his forecast for Disney based on the Disney Plus subscription sales. And so our recommendation then was, let's keep Disney for a while and see if these Disney Plus subscription sales do pan out, and then we would sell Comcast and replace it with Google. So if there's, I can ask now if there's any questions about our sector review. If there's no questions or you're thinking about one, I'll just talk about what our suggestion was for the future. So October, the suggestion would be we do a consumer cyclical sector review. The baby would be Norinda, and then Domino's would be Minna. And I guess the thing for the stock watchers are you available, from now to the next meeting to participate in a stock challenge? In doing our review, Hanny's volunteered to be the lead of a technology sector review, and the stock watchers in that are Jay, Isla, and Qualis. Hanny would like a month or so to, he's quite busy right now, but in the future, he would look after the technology sector. And then we'll move on to financial services, healthcare, and the other gold, REIT, and utility sectors. So
I have a simple question.
Yes.
So not doing anything.
Yeah, Mahesh, Google presentation is really, really good in depth. We have Amazon already, and Google is a very high priced stock. What do you think we should buy? A few shares of Google too?
That would be that's our suggestions. We realize that, but it's a large company, it would make our large company sector big, but we can also reduce our, we are pushing on the limits on our communication sector at 30%, but we can reduce that down. We had an argument about should we make them all 10%, or 9% or 8%, but the thought was let's see how Disney performs, and then in the as the months go on and we do more analysis, we can revisit that the large.
I guess we're also just replacing Comcast with Google, so we're not really changing the sector percentage very much, right? It's a like for like kind of thing.
Right. That's another good point.
Yeah, that's a good point. Henny?
And we also talked about maybe later selling some of Facebook, if it came to that.
Yeah, right. We could trim the sector to let other sectors be more dominant, because that was the other part of the observation, is that we have some positions that are very small. We should make them bigger or sell them.
Well, I wasn't talking sector, I was talking about within the communication sector, we can change the proportion of Facebook, Disney, and Google. if Disney suddenly is doing great, we could sell some positions in Facebook and buy more Disney, or, you know.
Yep.
Oh, nonsense.
Okay.
Haha.
Okay. So do we have, is that the final presentation then for the challenge?
Right.
Do we want to vote? Previously we had voted once we did the discussion, or do you want to hold the voting till the end?
Well, people may want to see what Matt has to say about Disney.
Okay. All right.
Confirm
Okay.
our presentation.
Okay.
I thought Haney was going to present Comcast. I thought Haney was going to present Comcast.
Well,
I presented Comcast last month, and all I can say about Comcast is the results were good. I think we're just looking at the portfolio as a whole and trying to get the total return of the portfolio up a little higher. And so when you look at Comcast, it's it's about 7%, the projected annual return, and Google is a lot higher than that. So we're just replacing one with the other so that the overall return of the portfolio goes up.
okay. So we'll wait till we hear from Matt on Disney. So now we'll just do a quick 3 minutes per quarterly report. I'll start out, and I'm taking Carol's suggestion from last month to at least show the SSG. Actually, so I'm doing Algonquin, and let's see, do I have that? Okay. I actually am gonna show that big chart PE that Adam had set up previously. This is showing the PE highs and lows, and the black is, I don't know, can everybody see this? It's kind of, it's actually not working that way. Okay, so the black is Algonquin, AQN, and the kind of brown chart is the S&P. So you notice that Algonquin tracks pretty closely to the S&P until recently, where this is a 5-year chart where it really starts to drop down. So there's and then you'll notice on the second chart, the PE ratio, that they've dropped below the average low PE. So the current PE is 13.4, and the average low PE is 17.1. So investors are losing interest in Algonquin. I think they've had challenges with the Texas freeze, some COVID issues. My recommendation is to, let's see, and this is how it's performed for us. Notice at the beginning of January, it was at its peak, and it's been kind of trailing down. So far, Algonquin has given us a 30.3% return. I think that we can, it's still a good company. I think it's just going through a challenging spot right now. I wouldn't buy more, but my recommendation is to hold. And Matt reviewed it, and I think, Matt, you agree. Is that correct? I don't know. He's muted.
Yeah, I just had a question about, if I can find it here. I think you use like a really low PE.
Let me see.
Do you think the PEs will go back to where they were like before COVID?
Yeah, well, so let's see. If you look at the PEs here, it's really, it's really dipped down. I don't know. My projected PE, I wouldn't say it's going to go up quickly. because see how it's really dropped down here. It's
Mm-hmm.
I don't think it's going to be. This is the COVID, the March, right here where everything dropped, and then it came back pretty quickly. But I think once it drops like here, back, I don't know what year this was. It kind of they need some time to recover, and then they start slowly building back up.
Mm-hmm.
So that's
Okay. Yeah, that was my only question. But yeah, I think
okay.
it'll hold.
Okay. All right. The next person we have is Matt for Disney. Matt, I'll give you the screen. Or do you just want me to show your chart? I can show your chart if you just want to speak to it.
Yeah, sure.
Okay.
So I chose 14% forecast for sales growth over 5 years. And that's based pretty much solely, not solely, but it's based on a 5% growth for all the legacy businesses, which is just below the average of the prior 10 years or so. Which you can see there is 6.3. So I chose 5% for those businesses and then separated out the direct-to-consumer business, which is Disney Plus, Hulu, and ESPN Plus. And for that, I actually used let me double check, 35% per year growth rate. It's currently growing by almost 60% year over year, the direct-to-consumer revenue, as they add subscribers pretty quickly. So basically using that 14% and then plugging it into the preferred procedure gives you a 12.4% earnings per share growth rate, which is what I plugged in for the SSG. And then for the high and low PEs on the next slide, I don't recall exactly what I used. But if I look, I used 22.5 and 15.6, which is the average low. And then 22.5, I believe, is roughly what it was, the average high. The recent high was 23.5, so I just went a little below that. So that's what I used, and it gave us a 2.8 to 1 upside downside ratio, and not quite a 15% return. I believe it was, 15.6 at the high and 12% at the low. So the price actually did drop a little bit today. It's probably just barely in the buy range. But for now, I'm thinking hold. So Disney's roughly halfway to their targets for subscribers for Disney Plus, which is about half the subscribers that Netflix has. So I think if we believe that Disney will become the dominant streaming service in the future and overtake Netflix, it's probably a reasonable time to buy. If you think they'll continue to be second and maintain, then a hold is probably a good decision. But I think at this recovery from COVID and all the park shutdowns and cruises and movie theaters and things like that, it's not a great time to sell. That is the summary of my presentation. Any questions? Thanks.
Okay, I've muted people, so let's see, people, let me unmute people. Just a reminder, please mute yourselves if you're not speaking. Okay, questions? Okay. Let's see, I'm gonna call out the people that need to mute. Bernard, Hanny. Okay. All right, next person is Narinda about eBay.
So
Narinda. Yes, Bernard? Okay, he muted. Okay. Narinda, did you want to speak about eBay?
Yes, I'm ready.
Okay, yes, okay. I'm showing your SSG.
Okay.
Did you want to give us
So
a quick overview?
yes. So while eBay has reported better than expected second quarter results, when I did my research, I could not come up with other than the sell, in that when I looked at Morningstar key ratios, sales have been declining, and so with a negative growth over the last 10 years, both in sales and earnings per share, it was difficult really to make a forecast. So I came up with a 4% for sales and 5.1 for earnings per share. The analysts have been pretty aggressive in terms of earnings. Morningstar with 17.3, Value Line 16.5. The analysts consensus estimates, they give us a 8.1. And in terms of the analysts seeking alpha, they concluded that eBay faces intense competition that may eventually cause growth to turn negative. And they also suggest that we should not be fooled by the low PE multiple and stock buybacks, because there seem to be signs of a classic value trap. CFRA, again, they too think that because eBay's competitor Amazon which has a substantial advantage over eBay, and with eBay's balance sheet highly leveraged, there's little room for error. The SSG also, the SSG also, sorry about that. The SSG also gives an annualized rate of return of 1.5 using the forecast high PE, and a minus 3.1 using the forecast average PE. And on that basis, I recommend a sell of eBay.
Okay.
I don't think it qualifies as a quality growth company.
Okay, thank you. Piero, did you have a chance to review as a peer reviewer?
Yes, I did.
Okay, and what are your thoughts?
Yeah, I'm thinking the same way.
Okay.
Yeah, because it's a high risk area. Things are always changing. It's heavily technology dependent. If they execute well in the technology side, they could be go to higher price. But this is a high price point. It's better to sell now. It's risky.
Yeah, I think we've made money on this one too. So,
yeah.
Okay. Let's see. Franco-Nevada, Hanny. Oh, I don't have the. Oops.
If you could,
let's see. Do I have? Let me see.
No, I have it. I have it.
Oh, you do have it? Okay, I'll make you the presenter.
I have two screens, so I need you to.
Okay. Yeah.
Tell me which screen you're looking at.
We're looking at a candlestick thing. The black
Okay.
screen?
Yes. So let me switch, or I'll just move this over. Okay. Do you see the quarterly report?
Yeah.
Okay. So first of all, Franco-Nevada is a gold and energy, gold streaming and royalty company, which means that they don't actually do any mining. They own properties or they buy into mining projects, but they don't operate, so they don't have operational risk. They also own certain oil and gas resources in Canada, United States, and some small international projects. Most of their U.S. are oil and gas in the Permian and the Marcellus shale area. They had a very, very good second quarter. As you can see here, year over year sales growth, the most recent quarter increased by 77%, trailing 4 quarters by 33%. And then pre-tax profit is most recent quarter was 93.3 and 264% for the trailing 4 quarters. The same with EPS growth, pretty significant. So they're operating at near record margins. They're benefiting from the price of gold and silver and other precious metals like platinum. And also we've had a recovery in oil and gas prices, and that's been a boon to them. In addition to that, they've sold gold equivalent ounces, which is a unit of measure in the gold industry. So that's basically the production of all the properties that they bought into has increased significantly. They've been doing a lot of acquisitions, and so that's how they're growing their sales, is buying into attractive projects. Current PE is 38. The average PE is 37. So the relative PE is 52%. So that's pretty good. And I'll show you my SSG in a second, but I have an downside ratio of 5.1. This thing is confusing me a little bit. So the 12.7 compounded annual return is based on the high PE, and the 15.7 is based on the average PE. And that's before we started the meeting. That's what I was asking about. We can sort that out later. But anyways, I think going forward, they're going to have good growth prospects. They have zero debt on the balance sheet, 1.4 billion in capital, and they're generating about 250 million in free cash flow per quarter. So very, very strong. The reason we're holding this company is as a hedge for inflation and against also the U.S. dollar should the dollar go down with quantitative easing and all of that stuff. So they are looking at a number of new projects, but these 3 projects are now starting to pay off. They invested in these recently. This Segula royalty is in Côte d'Ivoire or Ivory Coast in Africa, and then Labrador Iron is in Newfoundland and Labrador in Canada. Vale is in Northern Ontario. Just by way of disclosure, they have their head office in Toronto, near where I live, and they used to be one of my clients. So, but I'm retired, so I can say whatever I want now. I think this is a pretty good company. I think the price is dropped quite a bit just because of gold companies are not in favor. But I think going forward, I would recommend a buy. And that's it. Thank you.
Okay, thank you, Danny. Let's see.
Annie, I have a question. Very, very nice presentation. But I see Bernard Scoville's SSG it shows negative EPS and sales forecasts by BetterInvesting. What is the reason for that?
This is the FSG.
Yeah, this is your SSG, but Bernard's
Yeah.
sent a one earlier. If you plot the BI forecast,
I don't
sales
think
and
Bernard is not a follower or a peer reviewer for Franco-Nevada, so I'm not sure why he did that.
he sent it. Generally, he's
Okay.
optimist, but
Okay. Well, we could talk about that offline. Can you wait to discuss that, Reddy?
Okay, I don't think
yeah, in the
Okay.
legend sales and EPS forecast, if you click those,
Okay.
it will plot those dots.
Okay, we're going to discuss that
Just below that, you
later.
arrow.
We're going to discuss that offline.
Look.
Okay, the next one is
Okay.
Domino's Pizza with Mina. Is Mina here? I can take the screen and let's see. Okay. Hi, Mina. Well, maybe Mina's. Mina, can you talk? Let's see. He might not be able to talk. Let's. Who is a peer reviewer? Oh, Bernard, you're the peer reviewer for Domino's.
Yes, I looked at the stocks. I did a stock selection guide
for Domino's?
Hello, can you hear me?
Yes.
Hello?
Yes, Bernard, we can hear
Yes,
you.
I did a stock selection guide for Domino's Pizza, and she had recommended a hold, and I agree with that. It's a hold,
Okay.
in my opinion.
Okay.
About 8 or 10% return.
Okay.
So I.
Mina, we can't really hear you. I think you're kind of. Oh shoot, Carol. You know what? Carol has to. Yeah. Hold on a second. Carol, do you want to give us a quick feedback? Let's see. Can you,
Sure.
Jay, can you make, oh, okay, great. Because Kim, you have to leave, right?
Yeah, I do.
Thank you.
So I'm really glad that you implemented my suggestion. It's helped me get a better flavor of how you're doing SSGs and such.
Okay.
So for today, I guess seeing some of them, I have some questions. Maybe you've covered this before of how you choose outliers or not. When do you cross data out?
Okay.
And go ahead.
No, I don't think we've ever really covered that. So that's a good point. So when do we cross out, exclude outliers?
Right,
Okay.
right.
Okay. Uh-huh.
And then I'm not sure if I heard Mahesh right or not when he was talking about value line and their profit margin forecast. I just want to be sure that everyone understands that's a net profit margin on value line. So that's after taxes.
Okay.
And if you want to calculate the pre-tax profit margin, what you would do is take their net profit margin and divide it by 1 minus the tax rate as a decimal point. So I looked it up quickly. So it'd be 28.8 divided by 0.7 or 0.83 or 87, whatever it was. It actually gives you a 33% pre-tax profit margin would be value lines forecast for Google.
Great. Well, I'll be sure to document that then. Thank you for the feedback. That's great. Yeah, we take your feedback,
All
try
right.
to implement it. So We listen.
That's good.
Okay.
And
all right.
overall, Mahesh did an excellent job. I like that you're using kind of the first cut format and really walking through the whole study with, how does the company make money, understanding, all the different sources of data. That was all really good.
Great. Thank you. We appreciate you taking the time. Yeah.
Okay, gotta go.
Okay. All right.
Bye-bye.
Have a good day. Okay. Have a good evening. Okay. Let's go back to Mina. Mina, are you able to talk now?
Mina's self-muted.
Oh,
Okay, there you go.
okay.
Go ahead, try again, Mina.
Hello?
Yeah, there you go.
Hello?
Go ahead, Mina. Yes, we can hear you.
Oh, you can hear me now. Okay, sorry about that. Yeah, my apologies for that. I'm just having some connectivity issues. So like Bernard said, I recommended a hold for Domino's, and so fundamentally they had a great second quarter. U.S. sales growth for the quarter is 21% increase in their sales. There's a consistency in increasing new stores both within the U.S. and internationally, and so there is a lot of optimism there. I believe. It's another consecutive, I believe, 54th consecutive quarter of positive store growth or openings. So they continue to expand, continued investment in their AI and the delivery apps. So a lot of their strategy involves creating a network of stores that would result in the shortest possible delivery time. So having as many locations as is feasible within any kind of geographic range, and it seems to be successful so far. So they continue to be optimistic. Management provide very positive projections and outlooks for the next 2 to 5 years. In terms of the SSG, I'm just having some technical difficulties. I can't pull my screen. Thank you for doing that. I've input 7% of the forecasting sales. Previous SSGs for this is 6. Now, the 1% just accounts for some of the increased optimism around the company and the results from Q2 to back it up. And in terms of the EPS, I've left it at EPS growth of 11%, which was consistent with the previous assessments and the previous numbers we used. And that results in a hold at an 8 to 10% annual return rate. And it's on the cusp of a buy. I think it's close to a 3-to-1 ratio. The only concern I have is that, like we discussed, we are looking to, as a club, to reduce our positions that are 3% or less of the total portfolio, either by way of increasing our holdings in that position or selling off. Now, Domino's, we've made a 100% profit on the position we have. Now, I believe it's about 3% of our total portfolio or under. So we would need to either buy more, which, I mean, I think the current price is still a recommended hold with the SSG data that we've used. And I don't necessarily think that this is the moment to sell, given all the optimism and continued growth. I think there is still some growth with the company. So that's why I've left it to hold for now for future assessment. But if, with the new philosophy, or not the new philosophy, with our new approach to kind of adjust our portfolio, I leave it to the group's wisdom to think if we need to kind of deal with some of our smaller positions, but it's a hold for now.
Okay, great. Appreciate your assessment, your analysis. Okay, so now potential sells. I know Comcast, Hanny is agreeing sell. eBay, Narinda says sell. Schwab, Piero, do you agree with selling Schwab? And Chris, do you agree with Qualys being a sell?
Joanne?
Yes, Piero, go ahead.
Piero. Yeah, no, it's a hold.
A hold. Okay, Chris? Is Chris there? Are you muted? Okay, while we wait for Chris, Bernard, do you agree that FAF is a buy?
Yes, it is.
Okay.
And not only me, but some of the insiders too.
Okay.
So yeah, it's
So
I really like it at this price. Yes.
okay. So
I
we've
think it's a real
seen
growth company. People say no, but real estate there's always more real estate. And they have title and insurance and escrow and all kinds of things to sell and provide. I think, and it's PE is 7.8, low
okay.
PE. Some insiders buying, and a good past sales go up, earnings go up, and I think the future is going to be good too. I think it's a buy.
Okay, so we're on your
And I have a stock selection
SSG.
guide if you want to look at it. But
Yeah, I've got it loaded for you, Bernard.
okay, good.
Okay, so let's see.
It doesn't show on the screen, but okay, yeah, there you go. Yeah. And so
Okay, you have
you
it's
can
a
see,
buy. Okay.
well, yeah, and if I could go down a bit, we could see, yeah, sales, everything. Oh boy.
What do you want to look at?
And what was, well,
I mean, the return, you have a
I
return
can't
of
move around, but okay, never mind. You got it. You're looking at it. This pretty well got it right here. Somewhere's on here.
okay.
Yes, I think it's a buy, and I get between 20, well, you see in 23%, 18%, even if it doesn't do all of that, but I think it's going to return pretty. But and this one here too is a medium-sized company, not extra large.
Oh, okay.
I like Google, but it's a very large company. Yeah.
Okay. All right.
This is I really think it's a buy.
Okay.
At 7.8 PE, my goodness. Everything else is selling 30 or 40 times PE. This one's about 8% PE. Yeah, and insiders buying. I don't know. I like it. Okay.
Okay. I'm having let's see, some problems with my showing my screen here. Let's see. Okay. Do we want to vote now then? Or do you want to do, yeah, I think we should probably vote.
Yes.
Okay, so Google was a buy, right? Franco Nevada was a buy.
Okay.
And then Comcast is a sell and eBay is a sell. That's with a recommendation. Oh, and FAF is a buy. So if we have any motions, we can discuss.
How much money do we have?
Yeah, and what does it do to our sector and portfolio?
Do you want? Okay, Reddy's online now. I'm going to give Reddy. I'm going to give you the screen.
Yeah. Yes. Yeah, it's a nice Google presentation, but I missed mine. As a preparation for this month's meeting, I deposited 1 week earlier and paid off John Patterson 1 week earlier. We have a Current balance is, how do we do that?
Reddy, did you want to share your screen or do you want me to share? I think you sent me the presentation.
Yes, I did. I'm projecting mine. If you let me share the screen, I can share.
I gave you, yeah, I shared the screen with you.
Okay. As a preparation for the meeting, I paid off 1 week earlier because we prepared 1 week earlier. Our current balance is 266. After
Reddy,
paying
I
off,
think we can't see your screen. We
Oh,
see something that says volume mixer. You have double. I think you have a double screen, so you got to move.
Okay.
Move your screen over.
I have too many
Yeah, there
screens
you go.
here. Okay.
There you go. Yeah.
Oh,
Oh, it disappeared.
I have too many screens here. Come on. Okay. After 2 months waiting to pay off John Catterson, we have a $266 cash balance. That includes today's contribution. I deposited 1 week earlier, but that's okay.
So we have no money.
How much money do we have for eBay?
I suggest because we have several sell candidates, before we consider buy candidate, try to address the sell candidates and see if we are selling any. That way we raise the cash and then decide buy candidates better.
So can I suggest something, Joanne?
Sure.
Okay, if we have $1,266 in cash, and if we sell eBay, we'll have something like $3,566 to get you $4,832. That could be split to buy FAF and Franco, Nevada. So
sorry, we also we have 3,050 in Comcast.
Well, I was going to suggest with Comcast, we just switch Comcast for Google.
Right, and then in eBay we have 3,566.
Yeah.
Yeah, if we can decide the sell candidates one after the other, then take up the buys. That will be good order.
So the first suggestion would be just swap Comcast and Google.
Yeah. So sell Comcast, use those proceeds to buy Google.
Right.
And then sell a combination of eBay and what's the other one we're going to say? eBay and
no, it's just you have 1,266 of cash and 3,560.
Okay. Sell eBay and combine that with their cash and split that between Franco, Nevada.
That's one suggestion. Yeah.
Okay.
Well, I would sorry, what split it between Franco, Nevada and what?
FAF.
So what's
okay, I would just do one or the other, because one of the objectives in the portfolio is to try to get each stock up to about 5. Each of those is, and then make a decision based on that.
Well, what percentage are we at for those two? FAF and Franco, Nevada.
Yeah, just a second. I'll get it.
Oh.
Can I get the screen for a minute?
Yeah, I'll give you the screen.
I can tell you that Franco, Nevada is about 5.9, and FAF is.
Okay, can you see the screen?
Yeah.
So FAF is 3%.
3%, yeah.
And Franco, Nevada is 5.6. So I would buy more FAF and bring it up to. We already have 5.6 in Franco, Nevada.
Yep.
Okay.
So should we?
Somebody's got to make a motion.
Yeah. We need to make a motion to sell first Comcast so we have money.
Okay.
Okay, I'm on my iClub, so I'll do the motion
Okay.
if you like. So the first motion is sell Comcast, CMCSA, and buy Google.
Is that motion from Tom?
Sure.
Tom, was that your suggestion?
Yes.
Was
Yes.
that your motion? Okay.
So
that was
do we need to be more specific, Hanny, and say sell all of Comcast and apply proceeds to Google, buying Google?
I think let's decide and vote sell orders first.
Yeah,
You
I
want to
will.
keep,
How
you
much
want to keep
balance
it
we have?
separate?
I want to keep it separate. I just want to
Okay.
sell Comcast.
Okay, we're going to keep it separate,
Okay.
Hanny, the motions.
Okay.
Okay. I'll second it.
So who's making that motion?
Tom made the
Also-
motion.
Sure. Sell
Okay.
Comcast. And Joanne seconds it.
Okay, for some reason it's not.
It came through on my icon.
Okay, here. Yep.
Okay. Do we know how much money is in that Comcast if we sell it all?
As of
3,000.
as of the time I prepared 3,200.
Okay. So I say I make a motion to buy 3,200 of Google. GOOG, not the GOOGL.
I suggest decide all the sell orders vote first. Then
Oh,
how much
sell
money
all
we
the
have.
do all the cells first?
All the cells first.
Well,
then we know how much total is there. Then do
ready,
the buy.
ready. We wanted to do a switch between Comcast and Google.
Yeah,
So
I think what Reddy is trying to get at is once we know the total amount, right? Then we can sort of proportion it to get a certain number of shares, probably, right?
Yeah, you cannot switch
that
exactly
changes the
from one to the other.
Yeah, but for Google and Comcast, we didn't want to change the
ratios.
Yeah, the ratio.
Right.
Yes, but they cost their share prices are different.
Share
Yeah,
prices are
but we
different.
can buy
and
slices. You don't have to buy a total share. You can buy a percentage of a share, a slice. You just put in the dollar amount and it calculates the shares owned.
Yeah.
Can you do that in reality?
Yeah. Look at
I can only asking for share. I cannot even.
Look at BioMarin and Disney.
Yeah.
Those shares are.
No, in reality, in a brokerage, you can't do that. You have to specify the number of shares.
Schwab, it's called slices.
I have bought and sold partial shares.
Yeah, me too.
It does not work for me.
Yeah,
Well, I
tried
think
two different
maybe it
accounts.
depends on your broker. It's probably depends on your broker.
Okay, it did not work.
I know in the U.S. Robinhood allows for partial share trading, and then in Canada, Wealthsimple has introduced it lately for a select number of companies.
Fidelity, you can. They let you.
Okay.
And Schwab.
Schwab doesn't allow me.
Maybe it's your account, because
it could be.
my account allows.
Okay, should we just vote?
Yes.
Okay.
Right now we have Comcast on the table. If we sell all of it, $3,200.
We sold all. Okay. What's the next motion?
Two people have voted so far.
Everyone vote.
I voted.
Oh, we have seconded and okay.
Okay, Jay has not voted.
I
Joanne has
voted.
not voted. Well,
It says
I'm just
I
looking at the
voted.
screen.
I just voted.
I voted too. Yeah.
Maybe it's slow.
The motion already passed. Wait, hold on. 8 yes, 1 no, 1 abstain.
No, I cannot go to the screen fast enough.
Okay,
Wait,
8
no,
yes,
the
1
motion not
abstain.
passed. Sorry, I was wrong.
It did not pass?
No, it hasn't calculated yet.
Oh,
Okay.
not yet.
It
Okay.
has to have a majority.
Okay, I just tried again.
A simple majority?
Yep.
Mm-hmm.
I'm sorry, I'm having a hard time connecting to my iClub. So if I can vote orally, I vote in favor of the motion.
So Narinda and Isla and Reddy need to vote.
Is
Yeah.
Isla here? Isla's so quiet.
Piero,
I have
Tom,
I have
Loftus.
too many emails. I'm looking at how
Oh,
many motions.
me? Why is mine not showing? I just voted. It says I voted. Darn it.
Did you vote on my iClub or through the email?
Through the email. Should I go to my iClub?
Yeah, that sometimes there's a lag, so it's better to just go on my iClub.
No.
It shows motion has ended. I don't understand.
Yeah, sure, motion ended.
Okay, I
Okay, it's
voted,
passed.
but it ended.
Okay, okay.
Okay, all right. New motion. What is the new motion by Google?
Google.
So the Comcast passed $3,200 cash.
Yep.
3,200,
How
is
do
it?
we know how much?
Yeah, today's price. I'll check the
So
today's
we're
price.
looking today's price. So is it GG? Is it voting mode one or no voting? Is it L
No,
with
no
L
voting.
without the L?
Annie?
Without L.
Without the L. GOOG. Without the L.
GOG.
Without the L?
So
Close
2,780.
2,780. Yeah.
Yeah.
So
3,200
2,700.
divided by 2,780.
Yeah.
Sorry, what is, didn't you say we're just gonna put the
Yeah, we're just-
amount for
yes.
Comcast,
Yes.
which is
32. 30, 50, 46.
30, 50,
Oh,
46.
okay.
So today's price is 30.50.
No, it
Yep.
doesn't matter.
That's Comcast. All right.
Yeah, but today things went down way bad, very bad today. Market.
All I'm saying is buy
Yeah.
3,050 of Google. So
Without the
whatever
L.
number of shares,
Oh, okay.
sorry,
Okay.
whatever the number of shares is, that's it.
Okay.
Motion is made by
1.1. Yeah.
motion is made by, is it Tom?
Yep, sure.
I'll second.
Me?
Buy 30.
Okay. What are 5 members? Voting has ended. Yes.
Yeah, I need to know this number.
Yeah, I'll send it to you. But if you just go on my iClub, you'll see it right here.
I had to put the.
How can we still have echo?
I don't know.
Now we can sell all the other ones.
Motion passed.
The motion passed for Google.
Mm-hmm.
I cannot open my.
That's
I
okay.
can't-
Motion passed. You cannot vote it. Yeah. Motion passed. You cannot vote. Yeah, you're not fast enough.
I think everyone should just, sign into their
next.
iClub every
I
meeting.
agree. I
Yeah,
agree.
Next one.
Sell eBay.
Sell eBay.
Yep.
How much?
It's about 35.66. It's value.
Okay. Okay. So
Motion
we made
by
money on eBay.
Megumi.
Yep.
How much? Do you know the gain, percentage gain on eBay? By chance?
18%. 18%.
That's pretty good. That's pretty
18.9.
good. We had a what, for 3 months? 4 months?
So you're going to put Narinda down for the motion?
Yes.
Okay.
I was too quick. I put Megumi. Sorry. That's okay.
That's okay.
She said yes. And she shouldn't have. It should have been Narinda. Megumi. Okay.
So
Okay, that worked as well. So we'll do a new motion. How much of FAF do we want to buy?
Was that all we were selling? Are we done with the sales?
Yes, that was
Okay.
it.
Well, as much money as we have.
No, well, we're going to bring FAF to 5%
As
at
much
least, right?
Okay, that's quick math. Let me see just a second. Go to Yahoo Finance.
So it looks like
About
4,000.
I
$1,400.
have a question about Google. Why would we buy
66.60.
GOOG when we could buy the Class A shares, GOOGL?
Because we
don't
don't vote. We don't vote at the shareholders meeting.
We don't vote. Okay.
And that's what the presentation was based on.
Yeah.
So it looks like you want about
Okay.
$1,900 of First American.
Does that bring us up to 5%?
Well, that would be 5.6%. I just going by
Okay.
Franco-Nevada's 4,033, and First American is 3% at 21.91. So
Mm.
you want to sort of 1,800 maybe.
Looks like about 1,300, right?
Whatever money you have, put it in.
How much do we have left
Whatever
for
you got.
for
Put all the money
Franco-Nevada
to
then?
work.
Yeah. What's
We
left for
have-
Franco-Nevada?
We have 35.51 for eBay. Is that right?
Yep.
3,500 plus 266 cash, Annie.
Sorry, you're gonna have to work all this out tomorrow already, because these are based on certain prices, right? So tomorrow at the opening, you're gonna have to check the prices, and then play around with these numbers.
Okay, but is the idea invest full balance?
Well, I don't know. I think.
Well, we have a stock challenge for next
A
month.
better investment.
Right.
We should have some money available for a stock challenge
for next month. Yeah.
Yeah.
But we're going to have 1,000,
because-
right? Or how much we're going to get?
No.
1,000 or 500?
Well, but okay, hold on. So if you look at next month, we're doing the consumer cyclical, right?
Yep.
Or discretionary, sorry, and that's Domino's and
Amazon.
and Amazon and
it was eBay, but we don't have to do it now.
we don't have that. Okay, so if you look at Domino's, we're only at about $2,000, 2.7%. So we'll need, if we sold all of that and bought, whatever else, whatever we're challenging Domino's with. So I think we should look at maybe just bringing Franco-Nevada up to 5%, or sorry, FAF to 5%, and then not using up all the money and leaving it till next month when we do the challenge, because we may not have enough, right?
So yeah, but when I put the transactions
But
tonight
there is a better.
when I put the transactions
There's
tomorrow,
a better investing principle that you're supposed to have all your money to work.
We
That's
will
better investing.
next month
but
we will have.
I guess we can wait a month, I guess.
Yeah,
Okay.
next month we'll have it all invested, Bernard.
especially considering the market
Very
today,
good.
Yeah.
that's not 100% rule.
Yeah. So, but anyways, Reddy, I can help you
This
out.
is a good time to buy. Everything went down.
Okay, yes. Some of it may still go down, but okay.
So
Can we make a vote?
September.
And I'm gonna make a motion that we buy FNF
FAF
or FAF, sorry, FAF
to bring to 5%. Is that your?
up to 5%
Okay.
of the portfolio.
As of tomorrow. Okay.
Well, we always do it. Yeah, that's
The next
not.
day, yeah.
Yeah, we always do the next
Market
day.
open. Yeah.
End of today.
No, market open tomorrow morning. Those are the prices that we use. So I made that. Somebody want to second that motion? No one? Okay, it doesn't pass.
I'll second.
Okay.
Yeah.
Pick, Megumi and by member and notify members and save motion.
I have a quick question.
Why is this thing not going? Okay.
Megumi has question.
Yeah, so why do we use next day instead of like today? What if it like completely drops after we make?
We've
Or
always
limit.
Still have the money, I guess.
Limit order.
Okay, it doesn't matter.
We've
Okay.
always used, historically, we've always used the opening prices of the day following the meeting.
Okay. It's just an unknown.
Say we'll buy X for $2,000 worth or whatever.
Okay.
Also,
Okay,
in reality,
the
if
limit.
you want to buy, you buy the unknowns, right? Because you bet on it, you don't know if it's going up or going down. Or you can set up the limit price too.
Limit order, yes.
So can we get to our attendees because it's getting rather
Or
late.
can we talk about the October meeting? Like who's going to lead the?
We can do that after because we have guests that
Okay.
probably
Sure.
wanna
Okay.
leave. I have a few other things afterwards as well.
Okay.
Okay. So go ahead, Joanne.
Okay. Okay. Just want to let everybody know that the motion's passed. Number 80, amendments to the Articles of Agreement. 79, departing member payout is within 2 months, announcing their departure date. And then number 78 is to agree to do sector challenges to update and renew our existing portfolio. So you wanted to wait to save this, you just want to adjourn the meeting now and open the mic and then discuss the stock study group and education presenter?
Yeah, I think that's yeah, we don't need to keep people longer than necessary for that.
We were good. If we can do it in 6 minutes, we'll be in time. Tom, can you do the stock study group? I think you've already presented it, right?
Yeah. Yeah. I guess it's are those people available?
Oh, can you tell me who they are?
So it's
Domino's.
Yeah.
Who else?
So it's Amazon and Domino's are the two stock watchers because we sold it was Narinda and eBay, but because we've sold it, she doesn't have to.
Let's see, who does Amazon?
Me.
Okay, so you do Amazon. Is that just so? It's just you and
Well, there's just two stocks.
those two stocks, and then Oh, we might have, do we have anybody, prospective members? That might,
or any other members that we need to lead and
oh, did Isla or Narendra, did somebody want to participate in a stock study?
Yeah, I think that one of them should, or both.
Narendra or Isla? You're self-muted if you're trying to talk. Narendra, would you like to be part of a stock study?
Yes, I can.
Okay. So when you do your challenge, you might find a better stock for that sector. Okay, so far we have Mina, Tom, L, and Narendra.
so what about Isla? Did you ask her?
Well, Isla, she's self-muted, so I can't hear.
Sorry, I was muted. No, I'm going to be traveling next month, so no.
All right. Let's see. So it's Tom, Narendra, Mina. Yeah, I forgot. Who was on this one? Hani, Megumi, Mahesh. Okay. So I don't know. Maybe Jay? Did you have somebody in mind for education for next month?
Do you guys curious about the cannabis business?
Yeah,
we have somebody in mind. She is consultant. She has her own business, but she also goes to Washington D.C. to present.
Oh, that'd be
work with politics too. I don't know if you guys curious. I can ask her.
Well, we
can do the same thing, collecting the questions. I can ask her if she's interested.
Okay. Thank you.
Cannabis? I don't know. Do you guys want to do it?
Yeah, we'll have stock in there, so we want to know.
Okay. So let's not say next month. I don't know if she's available next month. Can we? I'm going to ask her first. Okay. Yeah, put a question mark.
Well,
that's good.
Next month,
okay.
November won't be good because we have all of our reports, and then
we can wait. I cannot promise. I just
Okay.
So.
Okay.
All right. Okay.
Okay. I have an idea. Someday, maybe we should talk about ESG. It has implications for future investing.
Yeah. Okay. Do you want to do a education topic?
Criteria.
Yeah, Bernard.
Do you want to do education on that next month?
Well, okay, but no, not next month. We're moving. I'm busy moving. We're selling a house, moving. I don't have any time for anything. But in the future, I would be glad to.
Okay.
2 or 3 months from now, yeah.
Okay.
Yes.
Okay.
Yes.
So we'll just put that on hold for October. Okay, so I am going to.
Thank you. Yeah.
See. Okay, I'm going to adjourn the meeting. So I'm going to stop the recording and then go to our guests.